quite a crowd indeed. Well, thank you all for joining us for what I'm sure is going to be a pretty interesting chat, especially in the kind of current times with crypto collapsing and whatnot. But we are, alas, here to talk about Web3. And I've actually done a video about Web3 recently, just kind of trying to explain the concept, crypto, NFTs, a lot to sort of demystify here, I feel. So I think this will be quite an interesting opportunity to sort of unpack all of those concepts. Delighted to say we've been joined by Lauren Ingram, who is founder of Women of Web3, which is a community group which aims to get more women active and involved in the crypto space. We've also got Shelley Mannion of Verisart, which is a NFT minting platform. And last but not least, Choy Yong Cong, Vice President at the Singapore Economic Development Board. Lauren, I'd love to start with you. Just open up by, obviously, I think everyone in the room is perhaps I shouldn't, assume, but we've seen that the crypto markets are in quite a state of disarray at the moment. And as we're trying to understand all these concepts, perhaps it's important to sort of take a look back and look at all of what's going on. I mean, how do we sort of, interpret the latest kind of action in the crypto market at the moment?
Yeah, of course. I'll be honest, I have been looking at my eToro and my sort of crypto wallets and things with my hands like over my eyes in the last few days. Things have definitely been sort of going further and further down, but that's also reflected in the broader stock markets. Like, as we've seen inflation go up and also people panicking and selling off their things like Bitcoin for lower value. My personal approach, obviously not financial advice, but my personal approach is just hold on for dear life. I'm confident that things will sort of come back up. My broader optimism is about this set of technologies rather than any one specific cryptocurrency that I want to invest in. That I see it as a kind of more of a sort of dabbling and experimenting rather than I'm going to put all of my eggs in one crypto basket.
Yeah, and it's almost tempting to look at the title of this particular panel, which is obviously looking at what is the future of the internet. And I kind of ask myself, and I don't know if a lot of people will also be asking themselves, but is there a future for Web3? And I'm guessing, Lauren, you feel that there is one. What will that future look like?
Definitely. Also, just to kind of level set, I don't know how familiar people are with the term Web3, just because I know that lots of terms get used interchangeably. But Web3 or Web 3.0 refers to it's a catch-all term for things like NFTs, cryptocurrency, blockchain, and other decentralized technologies. The metaverse, any hyperbolic headlines you might have seen would include some of these words, and that's all part of Web3. But broadly, I am really optimistic that this is this sort of technology we're going to see become dominant in the next 5 to 10 years. So some of the players might not do that well, but actually a bear market when everything is in a sort of downward trend is actually a brilliant time to be building. There's still a lot of investment going in. So things like Andreessen Horowitz have just announced a $4.5 billion fund, the crypto fund. It feels like despite some numbers going down, we are seeing a lot of building and growth in this space.
And Shelley, to bring you into the conversation, on the business side, obviously you're working within a crypto company. I mean, what's the reaction within the sort of corporate space? As we're kind of looking at this, is there a lot of reflection, introspection about how businesses can kind of manage their way through all the sort of turmoil that we're seeing at the moment?
Yes, definitely, that's true. I think. The company that I work for is a startup. So obviously one of our biggest concerns is raising for Series A. Having received our seed round a couple of years ago, one of the biggest concerns obviously is our timing off, right? Is there kind of general discouragement, amongst investors? And I think we've had some interesting advice. I think. Some people have been very cautionary, and said, okay, not a good time to raise. You need to wait, sort of 9 to 12 months probably before the money starts flowing again. Others have said, look, there are still deals being done. It's hugely circumstantial. Depends on where you are with your company, what you have to show. And certainly, I guess we're hopeful that that the business that we have, which is independent NFT minting for creatives, is really something that, although certainly we're not seeing the kind of explosive growth that we saw in the beginning of last year, which was an incredible growth, particularly around NFTs and NFTs, so non-fungible tokens. I think Lauren, you sort of gave a definition the other day when we spoke, which was digital collectible. But to be fair, I actually think more of NFTs as a deed of ownership. That's kind of how I like to think about it. So it's something which is kind of sits alongside the digital asset that you own, right? Because most NFTs don't actually contain the asset themselves. They just point to the asset, right? So it's effectively like kind of a certificate of authenticity or a deed of ownership, right? Anyway, I think that within certainly within and amongst the creator community, it's more sober than it was. But actually, there still is a lot of optimism about what's to come, and also about, I think, some of the more interesting technical innovations that really do. How would you say, they have incredible promise for what is the future of Web3, right? What is the future of the internet? So you mentioned decentralization, which is really kind of at the very heart of this. And I think looking back at the if you take, say, a long view, right, and you say, okay, so we had this term called Web 2, right? And there was a point at which we asked, well, what the heck is Web 2? What does that mean, right? So, participatory technologies, the ability to like something or post a comment or, have a conversation online, right? So and we're seeing that to the extreme in a sense, at least in principle in Web3, right? Decentralization is pushing us even further, than we were in Web 2. And I think that's, it's cultural change, right? It's not just technological change. So whether or not, a particular technology, a particular cryptocurrency, ends up dominating in the end, we'll see, right? There'll be huge changes, right? And certain companies will emerge and have already emerged, as sort of leaders in the space. Certainly in the space that I work in, we're talking about, OpenSea, the leading NFT marketplace, other big ones like, Rarible, the Coinbase NFT platform recently launched. So yeah, I mean, there are definitely leaders in the space, whether they continue to be, going forward. But I do think it's really about these, these kind of technologies, things like decentralization, things like, true ownership, right, of a digital asset, which is what the NFT potentially provides. The ability to kind of control your finances, the ability to receive royalties, right, which hadn't existed in the art world until, very recently. So, or at least no programmatic way of controlling royalties.
And NFTs, obviously figuring out what exactly the value is there, I think is something that people are still kind of trying to get to grips with. I mean, there's a lot of monkey pictures and whatnot. If you look on Twitter, I'm not sure how many people still have some of those JPEGs as their Twitter profile pictures, but I'm sure that they're still out there. But Choy, to sort of bring your perspective in here, given your work with the Singapore Economic Development Board, I mean, I guess, my immediate question is, how does, government kind of body figure out all of this new tech and innovation? We heard from Rishi Sunak yesterday about the government's sort of crypto ambitions. Is that kind of a similar thing that you're hearing out of the Singapore government?
Yeah, no, I think that's a great question, right? And I think for context, I come from EDB, which is the Economic Development Board. Obviously, you guys know MAS, the Monetary Authority of Singapore, who's our partner in crime for this. But they are the regulators, and we are sort of the economic developers, right, to encourage economic activity. And I think the distinction between our roles also sort of plays out in how Singapore thinks about it, right? Obviously, on the regulatory side, and I don't speak for them, but I know that it's very important to manage the risk that comes with these new assets, these new cryptos, to manage two kinds of risk, right? The systemic risk with the larger financial ecosystem, and also protections for consumers and retail investors. That's important. And obviously, with Terra, with Luna, with Celsius doing what it's doing, and with the broader market crash now, I think on hindsight, that continues to be the important thing to do. But on our end, I think it's also very important to understand the innovation that can happen with the underlying technology, be it blockchain and some of the tokenization that happens on top of it. This is because I think we need to step away, I think, sometimes from the press, where, I heard a quote yesterday, which I thought was so apt. We need to understand that, crypto is really more than crypto trading and crypto exchanges, which is where a lot of attention is. Tokenization is bigger than crypto. Web3 is a concept that's bigger than tokenization. If you want to go further down, blockchain is a technology that's bigger than Web3. I think we do not talk enough about the innovation that happens in the layers above just crypto trading. And I think in this market is actually, obviously there's a lot of creative destruction, too much destruction of capital, which obviously we don't want to see. But at the same time, I think in this, they say in bear market, let's build. I think it's very true. In the bear market, when the market crashes, it takes away a lot of hype from some of these speculative things and things with very little utility, but focuses on where value is actually created. And to me, it creates a lot beyond just the cryptocurrencies, the trading, but in the layers either above or underneath it. And I think, again, coming back to Singapore's role, and we have a reputation, I guess, for better or worse, but I think that's how we look at it, really to manage the risk, systemic risk and consumer risk, but also to continue encouraging the innovation that happens in other use cases and the rest of the stack.
Exactly. Actually, that's what I'm probably most excited about in this space, is that layer of innovation, is that, if I'm very honest, the actual nuts and bolts of blockchain isn't what gets me out of bed in the morning. It's knowing that you're sort of taking a set of ideas and applying that to existing challenges, and then the innovation you're seeing on top of that, that's what really excites me. So like, even the way that NFTs have evolved in the last year. So if we were just buying monkey picture JPEGs last year, and actually that's still a very popular market, just sort of purely buying NFT art or digital collectibles, whatever we want to call it. I know NFTs can be a bit of a dirty word in a way, but we're seeing this huge amount of innovation and new use cases for how people can use them. So, for example, becoming a member of a community, and I think that's what what the consumer gets a huge amount of value out of, is whether it's something that feels like incredibly exclusive, like Gary Vaynerchuk's flying fish restaurant that you can only access once it's built and when you have the NFT. But the fact that you can then sell on your NFT is different than sort of becoming a member of something like Soho House or your local gym, is that you can't then regain that value by selling it on for hopefully more money. But I think you're right that once we get past that hype of everybody being sort of trying to sort of pump up the value of any of their digital assets, once we kind of take that away, I think you're still going to have lots of amazing ideas that will stick around.
And I guess, yeah, I mean, you mentioned some of those ideas that will kind of come to fruition. I mean, but could you flesh out a bit more about what does that new world look like? I mean, maybe we haven't imagined it quite yet, but I mean, will we sort of see all the sort of stuff that's out there at the moment in terms of, the Bored Ape, NFTs, all these other kind of things, or will it be a completely different picture and all of those things will kind of be wiped out off the face of the earth?
It's hard to say, although I do think maybe in 5 years' time we'll look back at things like Bored Ape Yacht Club, or just the idea of buying a JPEG as an NFT, and it might feel laughable in a few years' time, but I think there'll be some amazing things that you can access with NFTs, or whatever we choose to call them then, in 5 years' time. It's hard to imagine what that picture would look like, but even things like digital fashion or metaverse fashion, the idea that you might buy digital clothing for your avatar to wear. So anybody that's a gamer would be sort of familiar with this concept, but I think for the sort of general public, the idea of, could I buy this dress digitally or buy its digital twin, and whether or not I own the physical item, that takes some getting used to, or at least my parents really struggle to wrap their head around that when I tell them about what I work in. But I think you're going to get much more of that, especially as we try to move away from buying physical items in terms of like the level of waste in the world. And I think it will seem a lot more normal to just buy digital things.
Totally. And I completely sympathise with your point about trying to explain all of this stuff to family. It's crypto is officially banned as a word in my household, because my wife always has a go at me anytime I mention it. But we're here to talk about crypto, so I shall press on. Shelley, metaverse is another kind of buzzword that is bandied about a lot. But I think some of the things that Lauren was talking about that were quite interesting there was this, future where maybe we are all kind of, in a more kind of digital reality where we're interacting, and NFTs feature in that a bit more. But how will that kind of play out? And, how will Verisart and other kind of companies play a role in that?
Yeah, that's an interesting one. I guess I'd say that my own view is really that the pandemic was a bit of a watershed moment, I think, for digital in general, right? And this sort of idea of our virtual lives, what that means. I guess I've been a little bit skeptical of it ever since, I got into Second Life, now kind of more than a decade ago, and kind of, saw how unsatisfying an experience that was. I mean, satisfying for some people, yeah, for sure. But I guess, one of the things I thought was interesting is that, I don't know if anyone's seen the Yuga Labs, pitch deck, that's been going around, for their, I don't know, was it nearly 50 million, kind of raise that they did recently. But one of the things that they talked about was the metaverse almost exclusively, right? And they were like, look, this is a super unsatisfying experience. Like, it's just not good enough, right? And I think, we won't see widespread adoption of the metaverse or these kinds of, virtual reality or augmented reality technologies until they become really, really robust. I mean, in a similar way to your mobile phone or, other devices, right? Like, there'll be a moment where somebody just gets it. And I think that for me, that's what's interesting. I mean, this event is about founders and elevating founders. I don't know how many people in the audience are founders, but I would seriously encourage you to just look at the opportunities that are there. I mean, this is very much tying in with your point earlier about the, kind of, and also, you mentioned Anderson Horowitz, their A16Z, their crypto arm, put out a report recently that was really talking all about building. I mean, it was kind of, okay, let's, sober view of the market. Regulation is coming. We've got all kinds of headwinds, in terms of, the stock market and other things. It's the time to sort of put your head down and build. Well, the opportunity, the problem space is enormous, right? It's really interesting. At least I find it interesting as kind of, a creative technologist and a product designer. I think the kinds of opportunities that are out there to solve technical problems. And of course, technology has advanced so much in the years since, sort of Second Life, since earlier in my career, I, launched the first augmented reality app at a museum, and at that time, there were iterations of the generations of the technology that were sort of I don't know, several months or kind of 8 to 12 months apart, in the terms of generational, the sort of leaps that we saw with augmented reality. And, each time, that you had to redesign, the way you were approaching problems with that technology because it was advancing so quickly. And this space is going even faster, right? It's accelerating even quicker. And another interesting thing, I heard was that, again, just talking to potential investors and VCs and so on, they're saying look, all of the smartest people, all the best engineers are going into either crypto or environment. Those are the two areas that lots and lots of smart engineers are going into, right? That's where smart people are.
I wouldn't think those two things paired that well, given some of the environmental.
Maybe not, but you figure, again, there were problems to solve, right? And it just feels okay, so you've got lots of smart people, you've got interesting problems, you've got advancing technology, you've got the desire, I mentioned, sort of the pandemic as this watershed moment that pushed us all into these virtual lives, probably much more than we wanted to, right? And now you see this explosion of travel, right? Because everyone's oh, thank God, I can now be out in the real world. So obviously, there's a balancing out. There's a course correction. But I do think that because of the sort of incubation, where we were all sort of in our houses under lockdown, constantly online, it did accelerate something, right? It pushed some things forward in terms of our level of comfort. And our sort of, in a way, our ability to see ourselves in that world, right? In a way that I don't think existed before. So yeah, again, I mean, like Lauren says, difficult to predict exactly where it will go, but I do think that, that there is, let's just say that that virtual experience and that virtual life will definitely extend beyond just gamers, right?
And I know I sort of remarked jokingly about the climate question there, but it is actually, an important sort of issue. I mean, here at London Tech Week, there's a lot of chatter about climate tech and how there's so much investment flowing into, responsible technology. And when it comes to the kind of, government side of things, and, I mean, you've got some targets that you need to meet. We all need to kind of be conscious of the fact that, global warming is arriving thick and thin. How do governments respond to that challenge and also kind of look at crypto as an opportunity, given some of these concerns around the energy consumption involved there?
Yeah, Ryan, before I answer that question, I just want to come back to the point about metaverse because that's really interesting. I just want to add to that. And I think this is where, for us, for Singapore, as a government, as a state, distinctions and definitions are important, right? So we internally, and the industry some of the industry speaks this language as well. I think it's important to differentiate between the metaverse and Web3, and that's how we see it, right? And for us, the metaverse is really a real-time rendered virtual world where theoretically you can have an unlimited number of people participating in it, having a presence in it, a unique presence in it. And really, I think that's about, in layman's terms, that's about the experiences and interactions we can have from personal to professional to social. And that goes down to the technology that underpins it, AR, VR, software and hardware, 5G, compute, so on and so forth. So that's the metaverse for us. We spoke about Web3. It's really a philosophy, a concept of the internet, which is permissionless, it's open, that allows more people to participate in and changes the form of ownership. Why? And of course, in layman's terms, it's about who owns, I think, the internet, who gatekeeps the internet, and who owns the assets that we have and the data that we have on the internet. Why I brought out this distinction is because from our point of view, both from a developer and a regulator point of view, that you can have the metaverse, which is a Web 2 version and a Web 3 version, right? You can have a Web 2 version metaverse or Web 3 version metaverse. And I think it's not a foregone conclusion that wouldn't be a Web 2 version metaverse, where because you have a tech giant, either existing tech giant or new tech giant that ends up building out this metaverse, and we enter as users and we participate in it. But a lot of it, they gatekeep it, they will control the assets that we own, everything's in the cloud or private servers. Or metaverse could be a Web 3 version. Conversely, Web 3 can exist with or without a metaverse. Today, Web 3 communities already exist, right? On Twitter, Discord, the user interface is not as great, it's not a virtual world per se, but it exists. And can we bring it to the metaverse? Perhaps. But I think, alluding to what both of you were saying, I think for us, the magic and the innovation happens sometimes when the space between the metaverse and the Web3 comes together, that overlap space, because then you can talk about digital assets, there's value creation in these digital assets that can be owned, that can be traded, that can be experienced in the metaverse. So some of the things you were saying about, our profile pics, our avatars that we buy, we own, can be used in the metaverse and experienced that way. Some of the digital goods that can be experienced that way as well. So I think it's important to make that distinction. Sorry, so that was a long spiel for me because I think for us it's maybe important for the audience to understand how we actually look at it and what are the possible scenarios and outcomes that might happen from the branching of different technologies and different concepts. To your question about the environment, yeah, I think it's no secret that crypto and many chains of crypto today uses a disproportionate amount of energy. And I think what we aim to do is really to work with industry and work with the developers to move to protocols, I guess, that can consume less energy. And there's already a lot of moves to move to from proof of work to proof of stake. And I think that's what we intend to do. It's something that I don't think one government or one state can solve unilaterally. And I don't think it's something that we can regulate unilaterally because, crypto and Web3 and the chains by nature are decentralized. You can't regulate them only in one place because then they will move to another place and utilize globally. So I think unilateral regulation really falls short in this area. So I think it's about working with industry, working with developer community to move to mechanisms and chains that will consume less energy over time.
I wonder if, sorry to interrupt, I wonder if also being in a bear market might be a good moment for people to explore different blockchains. If at the moment the sort of dominant cryptocurrency for buying NFTs is Ether on the Ethereum blockchain, which is proof of work, which is incredibly uses a huge amount of energy. They are moving to a proof of stake blockchain, which uses something like 90% less energy. I remember when I spoke to a friend about the sort of difference between these blockchains and what you buy NFTs using, and they said, well, why don't you just do them all on the Solana blockchain if that's way better, way more energy efficient? I was like, well, that's not where the consumers are going. They want the popular NFTs because they believe that they'll go up in value. Those happen to be on the Ethereum blockchain. I'm sort of personally powerless to change that. But if we're in this kind of crossroads moment where lots of things are losing value, this might be an opportunity to sort of reassess. I can't remember which month it was, maybe it was April or May, briefly, the amount of transactions on the Solana blockchain did outdo Ethereum, and that's quite a big change, a big moment. So yeah, change is coming.
Yeah.
And just to add to that, I do think, you know, in terms of, we're talking about like trends, you know, things, or you could also call them like, you know, interesting areas to explore, interesting problem spaces. And certainly interoperability between chains is actually one of the most interesting, for me anyway, you know, kind of one of the most interesting and difficult problems to solve. But I also think it's just because, you know, not enough people have spent enough time thinking about it, right? I mean, the experience now for bridging between, so our minting platform supports Ethereum and it supports Polygon. So Polygon is a more energy efficient chain than Ethereum. However, again, like Lauren said, you know, Ethereum is kind of, you know, where the party is, right? I mean, that's where people are. That's, you know, the reason largely that people are, you know, sometimes interested in NFTs is because of the liquidity associated with them, right? It's this idea that they're tradable, and that's also, you know, something entirely, the speed with which, you know, you can sell, you can exchange, you can trade a piece of art on, you know, on these platforms is completely different than what it used to be. If you compare that to the sort of traditional art market, like, it really is game changing. But yeah, if you know, the idea, when you move a digital collectible or an NFT from one blockchain to the next, it's called bridging, right? And it's an incredibly awkward process. I mean, it really is, you know, like scary. You know, you put it out there and then you're like, ooh, what's happening? You don't know. You know, again, you know, these are the sort of the user experience challenges that exist now, you know, in this Web3 space that are just out there, problems to solve. You know, and thinking about the early days of the web and Web2 and so on, you know, equally there were UX challenges then too to solve. You know, these are quite thorny ones and actually quite interesting ones, but that's because they feel that way to us now, you know, but they won't in a few years' time. But I definitely think that, you know, this idea of interoperability between chains is definitely one of the sort of themes or topics that we're going to see. You know, if we do talk about the, you know, the future, right? Then I think there'll be so much more. I certainly hope there'll be much more interoperability between chains, and, you know, you won't be so locked in, you know, to a particular chain. And that, you know, you say, oh, well, there's a market for my, you know, Ethereum NFTs and Solana. Great, I'm going to bridge them, right? And yeah, hopefully that will be easier.
Yeah. I just want to add that I think, you know, sometimes we talk about Web 2 and Web 3 as though it's a sequential journey that we take, and then you need to move past Web 2 to get to Web 3. I honestly personally disagree with that, because I feel like, you know, there's this concept arising, which is, you know, what we call Web 2.5, because some of the problems that we talk about here, scalability, user experience, I mean, these are the things that Web 2 has done very, very well, right? Web 2 has scaled very well. They've reduced the cost of operation. If you guys remember, in the days of Web 0 or Web 1, we were all expected to run our own servers, to have our own email and our own website. Obviously, that didn't pan out. Thankfully, we don't have to run our own servers. But it just goes to show that I think Web 2 has its benefits on scalability, reducing the cost of operation. The user experience is incredibly frictionless these days. And of course, there's also a level of governance and dispute resolution that they do very well. And when we talk about these things, these are also things that Web3, I think, needs to get to mass adoption. I think the user experience needs to improve. People use Web3, but at the same time, expect some level of governance and sort of dispute resolution. I mean, if you get scammed, you sell a thing on OpenSea, I think you still see some comments about, oh, will OpenSea do that for me? But, you know, the immutability of blockchain is a double-edged sword. Once it's transacted, nothing, you can't roll back the blockchain. You can't tell the dev to do something for you, right?
You can't call customer service and ask them to, like, hey, I want that my money back.
Exactly,
Like, my
exactly.
NFT. It's like, no.
Hi,
Sorry.
blockchain dev, can I get my NFT back? It doesn't work. So I feel like, you know, there's still a lot of, you know, it will be a convergence, right? I think consumers or you know, community, using the new term, will come to a level of acceptance of what Web3 is and some things you can't do, the immutability, for example. But I think a lot of what Web2 does very well needs to be built into Web3, and then to gives us that kind of scalability and mass adoption, because these, to me, are the bottlenecks right now.
I think we should probably be talking about, you know, the consumer, and I mean we've been talking about the price crash and all that kind of means for the crypto market, but what it means for the consumer, I think, is, you know, all the more important, right? I mean, we probably have friends, family, others who have got involved in the market, and now clearly regulators are kind of waking up to that and starting to think about how they should respond to that. I mean, how do we expect that to kind of shake out?
I think this is a very, you know, thorny problem, right? I mean, the way we look at it, Singapore, for example, is, you know, like I mentioned, I think beyond protecting against systemic risk to the financial system, is also providing consumers protection. But beyond that, also the ideal is try to educate consumers and investors, retail investors, on what to expect. And this is not specific to Web3, right? Even for Web2, some of the retail investment platforms, when you have it in Singapore, before you can trade in, say, derivatives, ETFs, you need to sort of go through a course, right? To get through some questions so that, they know, like the consumers know what they're signing up for, and they are sort of passed to invest in those products. So I think that could be one way we approach it when it comes to Web3 and crypto, just educating consumers and community. But at the same time, I feel like there are limits to that because of human nature, right? And to some extent, human greed. Take I think Terra Luna, for example. I mean, how many of us truly understand what an algo stablecoin is and how that is different from a peg stablecoin? Like, even I can't explain the technicals of it. I just know that, somehow the way the mechanism works, if you have sort of market coming down, it leads to a death spiral. But I don't understand the technicals of it. But when you talk to investors, retail investors and consumers, and you put, oh, this is 15 to 20% yield that you can get on it, how many people are going to dig up the contract and read through the technicals of it? So I feel like while education would certainly be quite important for consumers and retail investors, that's something that we do have to work through, and it will take some time.
And I mean, any other views on the sort of the consumer impact, Lauren?
For less about the impact, but just thinking about the sort of demystifying point, I think most consumers are completely in the dark about a lot of these technologies, and I think once you sort of fall down the Web3 rabbit hole, you then start talking, like just babbling about blockchain and all this sort of thing, and you end up leaving people out and sort of lock other people out with language. And I think that's also a sort of slightly bigger barrier for women. This whole space does tend to be quite sort of intimidating, and it's very jargon heavy, and it sometimes feels like you need to be a developer just to kind of sort of sign a contract with your crypto wallet to buy an NFT. It's, yeah, as you said, the user experience really needs to improve. But it's, again, it's a big opportunity. There needs to be a sort of huge amount of education and just talking in layperson's terms about these things. So that's why I ended up starting a podcast about it. So I interview a different woman each week about what they do. So I try and interview like the best in the game, but get them to explain what they do in super basic terms, so that even when my gran listens in, she might have like a tiny bit of an idea of what's going on. And I think that's how you'll end up getting more mainstream adoption of these technologies, is bringing people on that journey rather than hoping that they'll end up on a Discord server, interacting with your community manager. Yes, sometimes it almost feels like we're hoping for the best, and we need to do more to bring people in.
Totally. I've been told there's time for Q&A, and we've got about 4 minutes left on the clock. I'm not sure quite how we facilitate this, but yeah, thanks. I think we've got a few questions. There's a chap over there with his hand up.
Hello. Hi. I'm about to ask a really boring legal question, but essentially the reason why I think that NFTs aren't regulated yet is because arguably they don't really do anything other than you get to buy a JPEG. Where do you see the regulation going when they actually start becoming a sophisticated asset class that have real assets that underpin them, like shares in companies, deeds in properties, debt instruments, because that's inevitably probably the future. So where do you see the regulation going? And secondly, how long might that take? It took about maybe just over a decade to introduce legitimate data privacy laws, GDPR. So can we hope that it takes as long for the regulators to introduce something of a similar nature for NFTs?
Yeah, I can quickly take that. I think, again, I don't speak for a regulator, so just to preface that. But I think, whether NFTs are considered security, I think that's the big question that's, globally, both the industry and the regulators are asking themselves. And, I would maybe take that more from a philosophical point of view, because I think it comes down to how consumers or investors see it when they first purchase their NFT, right? So obviously there's a group of people that would purchase an NFT and see it as a consumer product, I buy this token, I buy an NFT, could be a digital wearable, it could be an avatar PFP, and I'm going to use it for some use, and then that I gain the utility from it. Then if you think about it, it's a consumer product, right? Then it doesn't have to be regulated as security. But obviously, if I think the perception and the collective perception of society is that we buy NFTs with the expectation that I have a share and ownership in that project or in that company, and I expect the collective endeavor to allow it to rise in price, and there's an expectation of profit, then it becomes a security. So I feel like there could be obviously there could be top-down regulation, about a top-down view about how regulation evolve, but I think more philosophically, it would be how us as consumers, buyers, and investors start to see NFTs. And again, if you start to branch out, there are different kinds of NFTs, right? So again, you could class different kind of NFTs into different asset classes, be it just a consumer product or security. So, it's a bit of a non-answer, I admit, but I think it's very early days. And again, it's both top-down and bottom-up, and it could come down to which categories of NFTs that we're talking about.
Shelley, Lauren, any quick thoughts on that?
I think one thing that's going to come up quite quickly is KYC and AML. Like that. We're already seeing that in our own business. So in other words, what I expect to see reasonably soon is that, like, if we sell a high value NFT, for example, in our case, it represents an artwork, right? And there are already rules in place in the EU, that if you sell an artwork of high value, you're obliged to do KYC and AML, right? And so, I expect that we'll probably have to carry that out, as will other platforms too. I think it'll be really interesting to keep an eye on what happens I think it's in New York State, isn't it? That there's sort of a standoff right now between a number of crypto companies and the SEC, who's put out a letter, kind of indicating that they might begin to, the nature of how they might begin to regulate, cryptocurrencies and NFTs. I would also, just to clarify something that you said, though, you said, oh, well, when NFTs become more sophisticated and this, well, an NFT and a smart contract are two different things. Yeah, so it's important to distinguish those. And I think to your point just now, I think what we'll see is that there'll be there'll be a differentiation between what is kind of a more simplistic implementation, a more simplistic smart contract, which arguably an NFT can be, or a more complex contracts, right? Which actually have a huge number of methods and functions within them. That actually, once it's deployed, it's there. Like, if there are flaws in it, the only way to correct that is effectively to kind of, shut it down, stop minting against it, stop using it, and to redeploy something else. But people who already have tokens that are minted against that contract are kind of stuck in a way. So, anyway.
Some interesting thoughts right at the end there, and I wish we could get into them a bit more, but sadly we will have to leave it there. Perhaps we can continue it over various drinks and dinner arrangements later. But thank you guys so much for joining, and of course thanks to the audience for joining us as well.
Thank you.